Now let's start with the markets. Panic selling earlier today. Should Canadians start rethinking their portfolios in light of what happened today?
Yeah, it was certainly a rough day on the markets today. And this is after a very rough week last week. We saw limit markets open, limit down. Electronic circuit breakers kick in 4 minutes after trading. And so there's a lot of anxiety in markets. There's a lot of panic that's certainly besetting individuals. But I think it's important to realize that not to panic. We're in a short-term phenomenon with respect to the effects of coronavirus impacting markets and a lot of uncertainty in terms of how far this could spread. We've been affected over the weekend by the OPEC Plus conversations and really just a disarray in world oil prices. And so I think Canadians have to realize that fear and greed are really taking hold here, and panicking and going to cash is really the last thing you want to do at this point in time. We're down over 20% from highs at this point in the cycle, at this point in the market, sorry. And so if you were to sell at this point, you're only just locking in a loss. Markets will reflate over time. My view is this is more short-term oriented rather than long-term.
So the advice from you is hang tight, it will get better.
It will get better over time. That's not to ignore the current market situation. So I think it depends on one's specific situation. So certainly those who have cash and who have been maybe anticipating the effects of the market over certainly last week, this might be a good time to actually buy. Markets, as I said, are down over 20% in Canada. So you're buying at a much lower entry point. And as we saw back in 2008 and through 2009, there will be a recovery period. Markets will resume a positive course of action. So panicking is not the right course of action.
Panicking, not the right course of action, but the uncertainty is certainly making panic rather easy. Do you feel that the measures being taken by the government, we just heard from Deputy Prime Minister Chrystia Freeland saying that they'll be extending EI. Do you think measures like this will be enough to alleviate the panic?
I think it affects the sentiment. Certainly, this is not a demand-based phenomenon. We're looking at really a supply-side shock. So when you look at the coronavirus specifically, you're looking at goods not getting to market. You're looking at a disruption of the global supply chain. So the effects that the government can take with respect to economic stimulus, whether it's through rates or other means of promoting the demand side, I think that that addresses sentiment. Maybe that curbs some of the anxiety, but it won't have long-term effects on the economy. So very short-lived in my view.
Raymond Sawicki, a personal finance expert and chief investment officer, thank you for taking the time to speak with us.
My pleasure.